Aussie dollar long-term forecast for the week of December 19th, fxempire.com. The Australian dollar US dollar pair had a bearish week for the week. As the markets continue to run from risk in general, the pair is a risk-sensitive pair, and anytime there's massive concern in the markets, this pair will fall. The parity level giving way is a sign of just how many traders are concerned about global growth presently. The Chinese economy is presently slowing down, and as it is Australia's #1 export market, it makes sense that this will hurt the Australian economy over time. The demand for the Aussie dollar will decline, and the pair should fall. However, the 95 to parity level looks massively supportive. As you can see, there has been a lot of noise at that level. So breaking it down will be very difficult. And in fact, the support to some degree goes all the way back down to 93. Because of this, we don't look for a massive move down. Rather, we look for a grinding, slower kind of downward bias. The upside does seem limited to about the 103.50 area. So given both of those scenarios, we prefer selling rallies at this point, as we think the risk-off environment will continue. The nature of the currency markets right now is to buy the US dollar, so we just simply don't want to buy this pair. We prefer selling those rallies as the highs are starting to grind lower, and the risk-off environment out there with the situation in Europe definitely has headlines out there favoring a short position in the Australian dollar. If we break down below the lows, this is probably going to signify a more closer to the 2008 meltdown variety, which we aren't necessarily calling for, but let's face it, isn't exactly off the table either. While the Aussie dollar isn't always going to be tradable in the near future, it will be like a massive barometer on global trade in general. If this pair falls rapidly, everything else will as well. The bounces look most likely to be opportunities to sell now, and this is exactly what we'll be doing.